Hello, everybody. This is Michael Silver. Welcome back from Michael Leslie Investments. Just going to go over some portfolio management tips. We're also going to look at the previous podcast that we did. I did with an AI. I do my it's MichaelGPT. I do the podcast with an AI. And we're going to look at one that we filmed in April 18th and see how that held up. See, go back and what we have changed, what would we have, you know, what did we get right. So we're gonna go through a clip right now. But again, if you email me or reach out on the website if you have any questions for how to manage a portfolio or how to actively trade or or actively invest. Especially if you're a younger person, you definitely wanna be have a lot of more of your portfolio towards individual stocks because you have time. You have time to deal with the volatility if you're trying to build wealth or saving for retirement. You definitely want to you definitely want to be more in the S&P 500, more in stocks, more in individual stocks. You can take more risks with some of the growth stocks, the Nvidias, the Googles, the Amazon. So let's just go back to. I'm gonna start the podcast, and we're gonna take one section and see how that held up. Hear my strategy and tell me if you agree with this. I actually like there's some. So this was actually one thing I want to mention is this was actually after Trump started to slow down the tariffs. That was kind of a key indicator that things could pick up. We weren't sure. Nobody was sure. There's a lot of panic back then. But again, when there's panic, sometimes that's actually the time to sell because things have gone beaten down so much, or you're getting stocks at a better valuation. So um let's continue with this. Of the blue chip stocks that are down, and when they're down, if you give it time, you give it a year and a half, if Trump stops with the terrorists and he stops with messing around with that and focuses on some of the things that he's been focused on more recently, like debt and China and things like that, and less on the terrorists in particular. I'm liking handpicking some of the blue chips like Meta, um, Nvidia. Um, what else do I have? Amazon and um, and Apple are all about 30. So we'll continue with that in a second, but you look at those four, when ones that are that safe get beaten down that much, they're down, the market at this point was down about 20%. This was, around Liberation Day or whatever it was called, and 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 these stocks were down 30%. They're down more than the market. So you can get a 30%, even higher for some of these stocks if you invested in them. And we look today. Today is July 17th. You can see how um, three of them have recovered. Nvidia. I doubled down in people's portfolios on those four stocks. So Meta, Nvidia, and Amazon have all recovered pretty quickly. So you could have made up a decent chunk if you were to, if you were to allocate, move some of your money from say an S&P 500, which wasn't as down as much, or even from bonds. That's what Warren Buffett does when things fall. He'll definitely start to move. He'll move some of his safer assets into riskier assets to get the rally. So you definitely would have done well if you made this trade. And it's always a safe trade when Amazon, Nvidia, Meta, they're always going to be safe when they're down, especially when it's for no reason at all. Just a general trend of the economy. And I'm going to look at Apple right now. I think Apple is the only one that hasn't recovered, but even that, isn't too far off. It's made somewhat a push. I'm looking at it right now. It's at 211. Its high is at 236. You can do the math on that, but it's I would be getting in Apple still. I'm keeping my portions that I doubled down on for Apple, and I'm keeping that. I'm not going to triple down, but I would definitely stick with Apple. You know, that's the fourth of the three and the three of them definitely the three that I mentioned landed. So let's talk. Let's see what ChatGPT says about what how much you would have made if you invested in those four companies at certain intervals. So let's continue. Over 30% down. I mean, they're like 80% of what they were before. You get a 30% growth if you invest in them now. That was the 30% I was talking about. So, how do you feel about that strategy about of putting some of your stocks, some of your percentages in, if you have some cash on the sidelines, putting it in, some of those hand-picked big tech stock or big market cap stocks.
That strategy makes sense, especially if you're targeting blue chips with strong fundamentals. Buying them at a discount can provide solid returns if the market stabilizes. Diversification within those big names is a smart move.
So if give me a number on this. If you were to invest maybe 100,000 in those four names, which is diversified, Meta, Apple, Amazon, and Nvidia, and they all reached their all-time high. Is there a way? Can you give me your capital appreciation on that? Can you do that math in your head?
Sure. If each of those stocks return to their all-time highs, your capital appreciation would depend on the percentage increase from current prices.
Right. So what would that be?
If each stock gains around 30%, a $100,000 investment would grow to about 130,000.
Yep. So that's what I did on a lot of accounts. And if you put 100,000 in diversified, that's still diversification. That's still four stocks that you're only putting money into. So you're getting, they're different stocks, and on 100,000 you could have made a quick 30,000. I mean, yeah, it's risky. You need a lot. You need to have a big portfolio to be able to do that. But it rallied fast, and people were thinking, people were doing the opposite. People were selling off Amazon and selling off Nvidia. You can't do that. You got to hold. You got to expect the rally or hope for the rally. And when you see these big companies down 30%, that's always, I've been doing this long enough. That's when it's time to start being more interested. And you're never going to find Amazon, and you're never going to find Nvidia 30% down. And you look around Twitter and all the social media and even names such as Kathy Wood and Jim Cramer, they're saying rinse and repeat with this process. When the big ones that are safe, that are going to be long term buys, when they're down, you buy, you sell back you sell part of it when they recover, and then you do the same thing when it happens again. So that's my lesson to everybody who's listening. It's always good. It's always good to buy the safe ones that are long term, have long term value when they're valued at a better price. All right, thanks for listening. And next episode, we're going to be getting into the Robinhood and where we see it going. It's a trendy stock right now, but um, a lot of people, even the professionals, like here, Michael Leslie Investments and other investment firms are liking Robinhood. It's not just a meme stock. So we'll get into that next.